How's it going? Back from LizCon?
Yes, back and yeah, I got a bit delayed on the way back, but I'm happy I can join you guys. So yeah, awesome.
Yeah, great to have you. Thanks for joining, Derek. All right, I'll just kick things off. People will filter in as we go. So for everyone who doesn't know, this is AES from the forums, and welcome to the first meeting on the MakerDAO monthly strategy review. The purpose for today's call is to explain the benefits of a monthly strategy review, review this deck that I've drafted, and get community feedback on KPIs, scope, and process. The end goal for this project is to have a recurring monthly strategy call.
The NFT ecosystem
And
about creating NFTs now.
Sorry, Frank, can you go on mute?
Yeah, can you put in mute?
All right, there we go. The end goal for this project is to have recurring monthly strategy reviews and assess our performance as a DAO, and collaborate on different strategic initiatives. And feel free to jump in at any point. If there's something that you feel we should discuss as a group, this is gonna be a call that's hopefully more conversational and less me just speaking to everyone and drilling you on the slides that we have here. So first slide. As Drew mentioned during the last GNR call, we're starting to see some issues as the DAO scales up. Core units currently operate with largely minimal transparency and accountability and are perceived by some as not driving value to maker holders. I think a lot of people are just seeing more and more expenses pile up on maker burn. And even though those aren't truly actual expenses, it's a lot of initial budgets and the emergency buffers. They're still concerned that we're never going to burn maker. We're just going to keep spending it on internal costs, and they're not seeing a value from that. So, part of the problem is our existing core unit reporting is highly fragmented, lacks standardization, and is posted all over the forums. I remember when I first came to the maker forums, it was really difficult for me to find where everything was and get up to speed. And even today, it's tough to keep track of every single core unit's monthly reporting and stay up to date on what everyone's doing. And this is just even more true for people that are newer, spend less time on the forums than all of us on the call. And another issue is we don't really have a agreed upon strategy or core mission, and that leads to lack of focus and inefficient allocation of capital. And we've got the new clean money initiative being led by Rune, and I think that'll help a long way in driving a core mission and alignment across the DAO. But still, we need a way to measure ourselves and if we're being successful in executing that vision and mission. So why even have a strategy review in the first place? Just to give you a little background, my background's in consulting. I worked for Deloitte for about 3.5 years, and then I worked in corporate finance for a Fortune 500 company. And pretty much, I would assume that almost every Fortune 500 company has some sort of process like this. And it gives us a chance to take a step back from our daily work and assess how we're doing on executing the mission and strategy that we agree upon. Now, today, that's not crystal clear, and that's one of the things that I hope we can discuss on the call today. So it also gives us a chance to understand what issues or obstacles the DAO needs to address. That could be specific to an individual core unit, or it could be an overarching larger problem that multiple core units would have to collaborate to address. And we'd also want to have a chance to discuss any new opportunities. This space is evolving so rapidly that we want to make sure that we're aware of everything going on. New level ones, new level twos, et cetera, new types of collateral, stuff like that. And then in this call we adjust our plan, and this is going to be something that's very iterative in nature. It's not like we're going to set like a 1-year plan and then just follow it to the letter. It's going to be very adaptive. As the market's constantly evolving, we have to be flexible and continue to make sure that we're actually pushing for the right KPIs and measuring ourselves in a way that makes sense. And then the result of this is we'll be able to make more effective decisions with the money that the protocol is earning. We want to continue investing in growth and making sure we're supporting the core units that are driving that growth. So pause there for a second if anyone has any questions.
Now, Mark, for me, that all makes sense. I think, yeah, the varying levels of discussion we've had across the place all sort of make sense to what you're aligning to here. The one thing that was coming up in my mind when you were talking this through with regards to KPIs is and from your consulting experience in the background here, is there a difference to KPIs and OKRs, and should we be focusing on one versus another? But maybe that's an implementation detail we can get to later on down the line.
I've actually never heard of the term OKR.
Cool. So they're objectives and key results. So it's a different framing of the problem and potentially at a higher level as well. So it frames objectives much more broadly, and you restrict it to 3 to 5 objectives, and all the key results under that roll up to support the objective. And that can be done at a organizational level, and then each team or each core unit in our case would have key results and objectives that roll up to that top mission and vision of the organization, or the DAO in this case. So so I guess there's lots of ways to do it, but essentially, I align with everything you're saying here. So yeah, that's cool.
Yep, that makes total sense. And that's kind of what we'll get to a little later in the presentation. I call it strategic focus rather than OKR. But yeah, the idea is that these KPIs, which we'll go through in a couple minutes, will roll up to these strategic focus areas, our main areas that strategically I think it makes sense for us to focus on. And again, this is just my perspective. I've been working full time in the DAO for 3 weeks now. Been around a bit longer, but definitely open to feedback from people who've been around for longer, even new people that have ideas. So this slide is just essentially a copy paste from the financial reports. If you've seen them, you've seen this slide. It just gives a super high level view of income by revenue stream, our expenses, net income, and the recurring income from the interest, and then price performance, and then some commentary regarding what's driving the revenue, what's driving expenses, and this will be updated over time to reflect actual expenses. Right now, it's just reflective of what's on chain. And, we're starting to work with the different core units to get actual expenses. So we have a better visibility and predictability on actual spend. And the financial slide will be owned by myself, finance team. We'll cover this. In this presentation, I would envision a lot of core units having speaking roles. It's not just going to be like me or finance, talking to everyone. Everyone has ownership of their respective areas of the protocol. So risk, this would be Primo's risk team. We've got a new risk measure here called liquidity ratio, which measures our stablecoins in the PSM over all of our DAI liabilities. That's on the secondary axis on the right. And this would be a slide just for the risk team to cover how we're doing on the risk side of the business. This is a completely new slide, and this is something that I wanted to have a discussion about with everyone here. I guess real quick, we'll go over the strategic focus first. But this is the slide that I would say is similar to OKRs. Like today, our revenue is over 90% driven by, I think 85 plus driven by Ethereum vaults. And on top of that, if you add on like wrap BTC, it's up like another 5 to 10%, especially with the growth today. So maintaining market share in the Ethereum wrap BTC vaults is absolutely critical to retaining income, right? Like if we start losing share, and we have to some extent, as Compound and Aave have initiated these liquidity mining rewards, then if they continue to scale, we're just going to continue to bleed income. So, another piece of this is growing our DAI market share, right? So we want to make sure that we make DAI as accessible and easy to integrate as possible with all the different level one platforms, level 2 platforms, centralized businesses, etc. Like the easier it is to use DAI and the better a product it is, the better that Maker is going to do as a whole. And then when I think about what I think is third most important is driving our real world asset growth. The TAM, or the total addressable market for real world assets, dwarfs crypto today. And I'm sure crypto will continue to catch up, but opening ourselves up to a market that's in the hundreds of trillions, and starting to build those relationships with institutions like SocGen, that's going to really give us a lot of flexibility and sustainability when we go into an inevitable crypto bear market. I always hear people talk about like, oh, this time it's different, we're not gonna have a bear market, and then every single 4 years we go into a crypto bear market. So if we have a lot of real world assets generating interest income, we're gonna have a backstop. We're gonna be able to be more aggressive investing and allocating cash across the DAO. So I guess I'll pause there for a second if anyone has any feedback or suggestions, or if they disagree with these 3 primary like OKR strategic focus areas.
Hey, Ace, how do you guys are thinking about what Ethereum collaterals or Ethereum itself should be prioritized, right? And who makes that decision? Right now, the risk team is pretty much has that list where they give a priority score. So who do you think decision? And as an example, like D3M should have been yesterday's news, and it still isn't. So I'm just wondering how you feel about that, or how you're thinking about that.
Sorry, you're cutting out a little bit, Frank, but I think the question was around like, how do we maintain share and grow this, like in spite of different risk metrics, right? If that's wrong, correct me. But I think there's been ideas floated in the forums regarding competing with Aave Compound on liquidity mining, and Rune's even spoken about having some sort of dilution to incentivize customers to become Maker holders and be fully aligned with the protocol. And this is something that'll be, I think, actively discussed, and it's definitely not something that I would dictate, but I definitely feel that we really need to be actively monitoring share and analyzing like why we're losing. I think this type of market, it's heavily commoditized, right? So it's not like we have a competitive or unique edge, a product that gives us a moat of some sort. I think a lot of people that are borrowing are going to look for the place where they can borrow at the cheapest, and then just swap between them. So I think it's going to have to be a collaborative effort between everyone in the DAO, especially like Risk and the large delegates who have sway over, okay, do we want to try and make our income higher, or do we want to take share? Because usually those things are, I wouldn't say they're mutually exclusive, but you have different results based on your pricing on that in that respect. I think if you are an investor in the stock market, you've seen over the past 10 plus years that there's been a huge shift from value stocks to growth stocks. These new tech startups, they go for mass share and a sort of monopoly in the market, losing money the entire time, right? And then the idea is that they scale and can leverage, gain operating leverage, right? And then turn on the profitability spigot, like Amazon's shown with AWS, become extremely profitable. All right, I'll switch over to KPI scorecard. So this is a new
Sorry, if I may ask.
Yep, go right ahead.
Thanks. Regarding the point 3, have you assessed the legal implications of growing the real world assets?
Seb can probably speak to that better, but
yeah, I just want to say that this presentation is mainly on how to articulate strategic objectives in this report. It's not super relevant what are the strategic objectives, but obviously we need to discuss about what do we want as strategic objective. We need, I don't know how much we can have, maybe between 3 and 5. If we have 200 strategic objective, it's not those are not objectives. This is just a wish list. So this meeting is more on that front. But on onboarding real world asset, I think we are doing good regulatory-wise as well. And we can discuss that in the forum or in another meeting, no problem.
Okay, thanks.
Yep. And this this slide is called the KPI scorecard. And this slide has key metrics that support the strategic or focus or OKR areas, right? So we have different lending KPIs, different DI KPIs, and also some risk KPIs. At the top, we have FWBCC market share among lenders, world asset growth, recurring income, interest income correlation, vaults. So we're working on building some queries in Tune to get this data. I'm not sure if the data insights core unit has access to any of this type of information, but possibly you could integrate it. So the idea for this slide is really to get an understanding of how we're performing and how we're trending on these different KPIs. These KPIs are just ones that I've thought and seen from the discussion on the forum what seems most important to the project. If we find they're more relevant or better KPIs, happy to change and swap things around. And I expect we would continue to get better on finding like what's really going to move the needle for Maker long term and adjust the scorecard as necessary. But this would be a scorecard where we have representation from the growth team, the risk team, finance, protocol engineering, and just get a high level and make sure if we're not trending the right way or we're losing share, we need to understand why, and we need to make changes to address that. So I guess I'll pause there if anyone has any questions or feedback on this particular slide.
Mark, I'm not sure if this is the right slide for it, but somewhere in here we should also take into consideration ongoing costs such as oracles and in the sense of collateral onboarding. What are some of the overheads that it takes to get these on board? And those will probably only be known over time. As Seb goes through the different collateral types, real world assets, what's involved, the legal aspect, the structures that are required. I think that'll give more information into what it takes to do this. But that may be a useful indicator to show where opportunity and cost is plays into it. Just a thought.
Yep. Yeah, absolutely. We actually have a slide a little further, and I'll skip to it now. This is going to be this is a forecast slide for revenue and expenses, and this is extremely high level today. Most of the core unit expenses are what's on chain. Some core units have sent actual expenses for the month of September, and year to date is mostly what I can see on chain from money that's been drawn from Maker into core units and what people have in their emergency reserve. But yeah, 100% agree that we need to understand costs, and it's even more relevant. I know Nick made a post recently on the forum, I think yesterday, about offloading some collateral types and understanding like what our break even is on collateral types and having like a plan to get there. And if we don't get there, offboarding it, I think is something that's pretty easy for us and should be something for us to do pretty quickly. Granted, gas costs fluctuate a ton over time, and definitely would expect them if we continue to be in a bull market. But yeah, this slide right now, a 9+3 is the first number is actual months of actual data, and then the 3 is the forecast. So this changes every month. Next month it'll be 10+2, then 11+1, and it just shows you what the actual results are plus the forecast. And today, if you've seen the forecast file that I've distributed before, we're forecasting super high level based on trends, kind of throwing out outliers from liquidations and trading. But this will be a slide to get into more detail about where our revenue is coming from, and how we expect that to change in the next few months. Same thing for costs. Costs right now, it's just actuals year to date, but my plan is to work with core units on actually having like good forecasts. If we have a better sense of our actual expenses, we can be more flexible and more aggressive deploying capital. So if you look at the budgets on make or burn, you can see 2.5 to 3 million looks like our monthly burn rate. The reality is it's closer to half that. And I think that's really important for the community to know, because we're looking at a new core unit, might be slightly expensive, or a new product that we need to pay to develop. Like, people are going to be more reluctant to do that if they think our expenses are twice as high as they are in reality. So this slide will also give us an opportunity to talk with core units on like what's driving significant overages or underages in their budget, and talk about how we can start moving some money around to support different core units. I'll hop back a little bit. This slide is really a placeholder slide, but this will be a slide where we talk about our Ethereum lending market share. So we're gonna build a Dune query to have our market share versus Compound, Aave, etc. And the focus of this discussion is going to be with growth, and talking about like what are we doing to improve our market share, and how are we, like, what investments are we making to support it. This is me, I think, a pretty critical conversation, given the protocol is almost entirely reliant on Ethereum market share. So I think it's really important that we understand this market, what's driving it. Is it purely price? Is it impacted by customer relationships, et cetera, et cetera. But making sure that we're putting resources, capital, people into making sure that we maintain and grow this market share, very important. This will be about real world assets, which Seb will cover in more detail, but essentially trending up over time. Hopefully this continues to grow quite nicely. But since this is what I would say is our major, our largest opportunity for growth, I would say that we should be investing quite aggressively in scaling the team, addressing problems, and making sure that we can continue to grow this income. So for this slide, it would be Seb covering it in detail, like what's going on, what's in the pipeline, what issues are we facing, legal, regulatory wise, if anything, and then talk about like how we expect this to grow, and how we can scale this sustainably. On the DAI side of the business, I have a couple of slides, one for level 1 market share and one for level 2. So level 1, I have market share on the top left, just total DAI outstanding divided by the top 10 market caps of the other stable coins. And so we are growing over the past year and taking share, which is great to see. Obviously we want that to grow, continue to grow and take more and more share. But the story from that is that USDC is really taking share from Tether. And obviously that's something we want to be doing too. So I think looking at what USDC is doing and how we can try and I don't want to say copy, but take their lead on some of the things they're doing. to take share, right? Binance also eating into Tether's share quite a bit, but overall, I think that's great to see since Tether is the sketchiest stable coin. And then on-chain volume market share, we want DAI to be not just used for yield farming sitting in one contract on the blockchain, but actually used as a currency, right? So making sure that we're growing our on-chain volume will be important. And again, this is a slide where we talk about like, what are we doing to improve this? Like, how are we investing in the support? I definitely expect heavy involvement from growth and engineering as well, especially when it comes to level 2 market share. So these are pretty new queries. I know level 2s are just starting to take off. See, we have actually majority share and optimism, which is great to see, and we're lagging quite a bit on Arbitrum. But taking actions to try and support how we can start to take shares on level 2s, I think will be really important. So pause there again if anyone has any feedback or questions. All right, I'll take silence as agreement with everything I'm saying.
Yeah, so maybe just to add a little bit of color on what is the purpose of those objectives, it's really to take a high-level overview of what Maker is and what is the business model of Maker. Because the business model of Maker, we don't discuss it too often, but it's actually quite simple. We need the most DAI outstanding and use this kind of capital that people are investing into the protocol to generate yield. And the yield from those sort of investment is coming first to pay the DSR and then to the Maker token holders by increasing the surplus buffer, by burning MKR, by doing whatever you want.
Yeah.
So that's a business model. And we spend a lot of time discussing stuff that are not strategic at all. And I would argue that 80% of the time on the forum is spent on stuff that are not doing anything regarding this business model. And at the end of the day, we all want to make a price to increase and DAI to be stable. But we don't discuss that front, in my view, at least, not often. And having those clear objectives, strategic objectives, with updates on those might improve the discussion. And obviously, the first discussion is what are really the objectives we are trying to achieve.
Yeah, 100% agree with that. Yeah, I think the biggest change that me coming from consulting / corporate finance at a big public company is when we have monthly calls at that company, it's all business operation strategic focus, and here we barely have any. Granted, we're transitioning to the DAO, we're scaling up, but we need to start looking at this like a business strategically, seeing what competitive advantages we have and really pushing on those and exploiting them, so we can scale up over time. So I've got a bunch of other slides in here. They're all quite similar. This format is called mandate execution. And so this is something that we've put together to help improve transparency and accountability. And this is just a super basic template for finance. But the idea here is to take the mandate, put it on the left-hand side of the screen, and then in the middle, align a certain status. Green if we're in progress, nearing completion on it, or everything is good there. Yellow if we're making progress against that strategic initiative or mandate, but there could be potential issues. And red if there are major issues, we expect not to achieve this. And the goal here is really to provide crystal clear transparency to what the CUs have promised in their MIP 39 proposals, and have a conversation with the DAO in terms of like, are we actually achieving what we promised? Do some of these mandates even make sense today? Should we change them and make something more appropriate since the market is evolving and changing? But it's really about providing transparency and accountability and having an open forum for, the core unit to discuss, with the community, what's going on and how they're executing against what they envisioned originally. So I envisioned that, all of the major core units would present something like this. And I went through all the different MIP 39s, and like the mandates that people are posting are not really standardized at all. But, ideally you would have something that's, quantifiable or measurable, pretty specific, not something that's broad or vague. And then, the idea for this isn't to just like hold people accountable, but it's to understand like where we're having issues accomplishing, what we want to accomplish, and how we can, allocate resources, if that's people or money, and how we can solve those problems together. I think one of the advantages of the DAO is having, this open collaboration from a lot of different people, a lot of different backgrounds, and getting a lot of different ideas. So if you're siloed within your core unit, not really discussing stuff publicly, you're not taking advantage of the DAO structure. So, I hope that we can get buy-in from, the core units to start posting something like this and presenting this every month. And this doesn't have to be a fixed template either. If you want to go into more detail in another slide about what's going on and speak to more things, this is developed from like a finance perspective, right? So if people want to talk about stuff they feel like is very important strategically, it's not really covered in the mandate or elsewhere, that would be highly encouraged, right? The idea is for all of us to collaborate and align on a strategy and solve problems together. So that's really everything I wanted to cover today. I'd like to open it up now for, I don't know if we want to touch on KPIs, the OKRs, or something that you feel is missing or should be changed in the presentation. So everyone thinks this is perfect and is ready to present next month.
I'm thinking through what I would need to do, but for me, I mean, a big one that came up, and we had a couple of conversations with L-Pro on this one as well. In Lisbon was all the work around L2. So, we've got the work in flow with Optimism, with Arbitrum. Yep. We have discussions with the StarkNet guys. We also had a catch up with ZK Sync, and potentially another L2. So there's, I really like the L2 slide you had there, and I'm thinking, okay, how do I convert this sort of slide into that? And I think it's doable. It's really quite similar to OKRs in the sense. I think I'd probably add in some sub levels to it just to make sure I keep the team sticking to those targets throughout the month or the quarter. I don't know. Were you thinking of doing this quarterly or monthly? I think you mentioned monthly, but
yeah, monthly. Usually this is like a monthly type of process. Quarterly, we could be even more comprehensive if we wanted to. But I think in this type of business where like the industry is rapidly changing, like I feel like meeting more often rather than not. Like if we're in a mature industry, mature business, meeting monthly not as important. But given how fast things move in crypto, I think meeting monthly is probably the right play.
Yeah, cool. Agree. Yeah, that makes sense.
Yeah. Hey, I really like this. This is Eric, pretty new, but on the strategic stuff, what I wonder about is how to get more into, like, how is our product doing versus the competitors? What does the market want, in a sense? Because at the end of the day, for a new product, it's all about market fit. And like, how do we tell? Do we have the right product? Should we be pivoting a little? I mean, because you make some really good points about growing fast. You need to get to scale, but you're like, do we really like? How do we know whether what the market's using our product for, and is it the right product to have? Is crypto lending as popular as like USDC, and what are the meaningful differences and why?
Yeah, no, that's a great question. Thanks, Eric. And I think part of the issue right now for us is that, we're really lacking data. Like everything that pretty much everything you see here is the result of like a Dune query that Seb's put together, right? So getting like good data and getting like business insights developed, I think will help provide strategic direction. But on the growth side, on the product side, it's really going to be something that I expect the growth team to be spearheading. Just like in any traditional organization, you have a sales team that's closest to the product and the customers and understanding what the customers want. So I'm really going to be leaning on Nadia and the growth team to give a good perspective of what's like going on, why people are taking USD or integrating USDC or Tether over DAI. Like to me, it's like anytime I see an integration of USDT or DAI, I die a little inside, because on one hand you have a centralized, very sketchily backed. I don't know if you've seen the post of Tether's reserves, but over half of it I think is commercial paper that's in with undefined counterparties, which if you were holding Tether, that would be extremely scary to me. So I would never personally hold Tether. And then on the other hand, you have DAI, which is 100% transparent in terms of what backs it. So I feel like, from my perspective as a user, like why would I ever use Tether over DAI? And like what I can see in the marketplace is that Tether's available in more places. Now, like what's driving that? It's hard to say, but I think Nadia would have a great idea of why that's happening, be able to articulate it. And then, based on her feedback, I think we understand the challenges of the product. And I know for some people, it's just being able to swap it directly for $1, for cash. But understanding the problems and how we can creatively come up with solutions will be really important.
Yeah, that's helpful. I think it's so early in this market, and having the right product seems so important. Again, to your point, we're not in a mature industry where we should be obsessed on what the consumer needs and are we providing that? And like how can we better measure that? Because I think at the end of the day, this market, or at least current stable coins, have a real economy of scale, and also I guess you'd say a network economy, where there's probably at the end of the day at scale, there's only going to be a handful. There's going to be a few monsters, and so not being able to get there quickly, with the right product, probably means you're going to die on the vine. Would be my concern.
Yep.
Okay, I just wanted to say that.
Yeah, not 100% agree with that. So yeah, that's something that I'd hope to accomplish on this type of call, of just understanding what are the challenges for DAI for customers. And I know some of it's the fees of swapping, like with the PSM, lowering that to zero will address some of those issues, but could create other problems, right, that have been articulated in the forums. So understanding what customers want, understanding the trade-offs, something that we would definitely want to discuss during this type of call.
So I have a quick question. So there are a lot of different like initiatives and then even sub initiatives under that, right? Like layer 2, for example, Oracle's collateral onboarding, real world assets, various like standalone technical upgrades, etc. And so I see this call as extremely important for like in the informational sense, kind of getting everybody to sync up, once a month or once a quarter, what be it, on not just the initiative progress, status, obstacles, details, but also the core unit status, obstacles, and details. So I think as an informational call, this is extremely awesome. And thank you so much for putting it together. I really like the format. But I am curious, since there is so much, I don't know that a lot of like the finer discussion around individual initiatives, like I don't know if that scales, basically is what I'm saying. And I'm curious if I'm trying to fit this call into like a sort of bigger vision of calls at MakerDAO that I've been thinking about, also talking with other core unit facilitators about trying to model it out in Lucidchart, and basically trying to see how this informational call can fit in with like the coordination side. Because what I hear is, we need to share information so that we can coordinate better, right? And part of the objective of this call is so that we can all sync on some very, very high level, but very important pieces for our overall business, or for the overall business. So yeah, these are just some of the thoughts that are floating around in my head from the GovComms side. And so, yeah, I don't really have a question there. I just wanted to share that because that's one of my main concerns, is that like a monthly call like this doesn't really scale in terms of like the depth of interaction that you might want. And so I feel like there's going to be a lot of secondary calls as a result of conversations that happen or ideas that are presented at this call that, yeah. So anyway, I'm going to pause here and collect some of my thoughts and see if anybody has interesting feedback or comments on that to share.
Yeah, so on this call, I think what would be difficult is to keep it small and strategic, meaning not all core units. And it was a discussion to how to frame the last slide, because we don't want all the core units, because if you have 50 core units, well, no one will stay for all core units because it's not strategic. It's no longer strategic. So we have thought a lot about could we make it by strategic objectives, but then it's getting a bit messy because you need to aggregate a lot of stuff that is happening in different core units, and that's not easy currently. So yeah, so I think the idea is really to open some discussion on stuff that we don't discuss otherwise. Like we just discussed that what is the product market fit of DAI? I didn't hear someone think, well, we have already made this analysis and we know by geographies why people are using which currencies, which stablecoin, and why. We don't know. And we don't know why people are using DAI, and we don't know why people are not using DAI. And that's the kind of discussion that you can open in such a call. And obviously, this call is just to discuss the problem, probably not to find the solutions. Or discuss the problem, probably not find the solutions. That will most likely be other calls, and discuss the progress on those items.
Hey, Mark, it's Rojo. Thanks very much for putting this together. The couple comments I want to make. First off, yeah, I think we need a process. And to support, I think what a lot of other people are saying is that this call needs to be really specific. And after many years of sitting around tables with finance people, to have some sort of, checklist or whatever it is that we're going to use, a very quick way to be able to check in the status of each of the core units, I think would be really valuable. But I also think that, as far as strategic directions, product planning, why we're doing what we're doing, that's probably outside of the scope of a call like this, at least in my opinion, simply because it's like each of the core units, in my opinion, are what I'll term mini product teams. So the reason we do the things that we do should be documented well in each of the core units. And then that information can be made available in a different form. So if you want the context behind why you have the OKRs or whatever we're going to use in the way of our terminology, that's fine. But we can point to that. But this is really the status update. Where are we at? How are we doing? And this green, yellow, red sort of terminology. Yeah, it's really familiar. And so if we're using this, that's great. Let's just decide on the process. Let's do the readout at this meeting, and let's save everything else for other meetings or just asynchronous communication. So just a quick comment for me.
Yeah, no, I agree with that. And yeah, the purpose is really to be high level, strategically focused. We're not going to have, very specific product type conversations within this call. I think the point is really to align as a DAO on what the problems are, like why we're facing those problems and how to solve them high level. And then after, the hope is that those conversations are effective, right? Collaborating with different stakeholders, different core units, will allow us to see and understand and come up with good solutions to those issues. And then off the call, core units go back and work on, actually executing a plan to fix those issues, right? So like, this is really, something to be high level strategic, to understand that people are working in the right direction. Because if, the growth team is working on, one particular product, and let's say, protocol engineering is trying to, implement something new, or we have Seb onboarding like a major real world asset, we want to have coordination, between those stakeholders to make sure that we're, rolling out stuff smoothly and, it's actually scaling efficiently, right? If people are doing different things with different priorities, right, it's not going to be particularly efficient.
Yeah, and I would agree with that. And there's just one other comment there, is that if this is the meeting that we use for the coordination, then we've really missed something, because this is the readout, and each of the core units, it's in our best interest to be able to make sure we're communicating with the other core units and aligning. But this is, for me, this doesn't come across as an alignment meeting. This is a readout meeting. For me, for CES, it's a monthly, quarterly, yearly cycle. So, hey, if we have this meeting and this is the monthly check-in, awesome. I could readily support that. And that's the cadence I've just worked on in the past. But from a coordination perspective, that's got to happen outside of this meeting and well in advance of this meeting.
Yeah, that's the point I was also trying to make.
But I think the coordination is indirect with this meeting. Because if the strategic objective, I don't know, let's take Arbitrum. We currently are not well on Arbitrum. So every core unit's working more or less on Arbitrum. Every week, they know that at the next strategic meeting, there will be this slide showing that we are not good on Arbitrum. And then anyone in the call can say, well, what happened? Why aren't we the stablecoin number one on Arbitrum? And then you better have to have a solution. So that means that having those call will make you work more on what is strategic than not strategic. Same for real world asset. Whatever the strategic objective on real world assets will be defined, will be the goal I will try to achieve, and I will work less on the rest because I will be on the hot seat at this time in the month. If that makes sense. And same for Rojo. If Rojo is making real world asset onboarding, well, maybe it's better for him to do real world asset onboarding because there is a strategic objective there than doing some other stuff when there is no strategic objective. For instance, in all the strategic objectives currently, you don't have to onboard Matic or all other coin. No one cares because it's not a strategic objective, so you can onboard them, but it's useless.
There's also another important point is that although core units post, about their initiatives, documentation around the initiatives, and are supposed to communicate with the other teams that might overlap in their efforts, I think that it's unrealistic to expect everybody to be synced about everyone, because also there's, teams that might not be as close to your initiatives, right? So I think something like this, although it is an informational call, there is an element of it that actually impacts our overall coordination. So yeah, like it shouldn't be the very granular coordination, as Rojo and many of you are saying. It should definitely be informational, but yeah.
Yeah, the purpose is really to quantify how we're doing on our strategic initiatives, right? And then make business decisions based on how we're doing. It's not really to, coordinate on different things, but to understand exactly, what's happening on these strategic initiatives and how to, make them better to support Maker. Anyone have any other questions or comments before we wrap this up?
Mark, just from a who will be doing the work perspective, how are we assigning ownership of these different slides?
So I'll probably send a PM out to people just with high level information. What I think you guys are probably most suited to speak to. Obviously you guys are super involved in level 2. Just use PE as an example, but obviously we want the people that are closest to the different strategic initiatives to be the ones to speak to the content of that slide, right?
Yeah. I mean, there'll be a number of things that staked ETH, D3M, all in terms of scaling DAI supply are huge initiatives. So yeah, I think scaling that up, rolling that up to a level that makes sense as we go through this and learn what level we want, I think we'll yeah, that's fine. That's cool. That makes sense.
Yep, for sure. And yeah, there's definitely gonna be slides where there's gonna be multiple people that are speaking, people that have ownership over both. So I could easily see you guys and Growth speaking on on DAI, for example, right?
Cool. Yeah.
And I know this is kind of a funny question, but Mark, can you remind me what team you're on again? I know you might have mentioned that at the beginning of the call.
You're looking at it, real world finance.
Oh yeah, right on. Sweet, thank you.
Yeah. All right, I guess we can wrap things up here. I'm gonna start reaching out to people, start drafting up some actual content with these slides. I still have some work to do with Seb on building some data that's missing on the KPI scorecard and some of the market share stuff. But I'll post a summary on the forums, and hopefully we can start hosting these calls in the next month or two, get some get a dry run in, and start talking more strategy.
Awesome, thank you. This will make for an awesome tweet thread. If Growth team are on that, this will be awesome information for them or others. So yeah, thank
agreed.
you.
Absolutely. All right, thanks everyone for the time this morning / afternoon, and I'll speak with you all later.
Great stuff, man. Take care.
Thanks.
Thanks all.